We've actually hit over 150 sales of the Beating the Banks course, which is incredible. So thank you to everyone who has purchased. How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you guys are new to this series, it's basically where I choose a few pairs that I feel hold good potential for the coming week, and I break down the analysis I've performed to give you guys a better understanding on how I am looking at tackling those markets in the coming week. If you guys have any questions or queries with regards to the analysis I go through today, please leave them in the comments below. If you do go on to enjoy the video, don't forget to leave it a thumbs up. Just a quick one. If you guys aren't involved in our free Telegram group chat, head down to the link in the description, get yourself involved. There's plenty of value in our Learning Lounge group chat, as well as weekly updates on the business. Now, with all that being said, let's jump straight into today's Sunday Sessions video. So the first pair I'm going to touch base on today is the New Zealand dollar to the US dollar. We can see here that price has been within what seems to be a corrective phase before a potential new push to the upside. This is my longer term bias for this market. Now, as we go down to the lower time frames, we look more at the fractal structure. So looking at the weekly now, again, we can see how price has had an initial push up, breaking the last protected high within this bearish structure here. And what we've seen is price has come back down to set what looks to be a higher low, and what I feel is now going to follow with a higher high. Now, as we head down to the hourly time frames, you can see here how we've had that bearish move to the downside. Price traded into what was a 4-hour fair value gap, and price began to trade higher. Now you can see that with recent events, with Trump and Harris, you can see that price traded lower, creating a dip to the downside. And I think now what we are seeing is price correcting itself before it continues to trade us higher. So we shouldn't get discouraged when we see things like this, because this was fundamentally driven. I feel price is now correcting itself, and we should see a continuation to the upside. What I've gone ahead and done is marked out a last sell to buy region here on the 1 hour time frames. I wanted to see price trade down and into this before taking us up. You can see here that price is traded just above that without actually trading into the area of interest. So it'll be interesting to see how price plays out over the course of this week. In order for me to get involved in this market this week, I do want to see a break in the last protected high within this bearish structure. So a break here would give me enough confluence to suggest that enough liquidity has been picked up and enough demand has been picked up in order to drive price higher. Now, in terms of my thoughts on how I feel the market is going to play out, I feel price will go on to set a new lower low, and this is then when we'll have the shift to the upside. We'll have the break of structure, and then we can start to trade price higher, because if price does go on now to set a lower low from here, then this would be the break of structure to the upside, meaning we could get involved here at a much better price and then trade price higher. So that's my thoughts for the New Zealand dollar to the US dollar market. I do believe price will come to trade us down and into this area of interest before taking us higher in the market. In order for us to look for a valid entry, we must see a break of structure to the upside to suggest an end to this bearish correction and the start of the next bullish one. So if you are someone who's looking to trade this market this coming week, I would be looking for buy opportunities. Just wait for the right confluence in order to get yourself involved. Okay, moving over to the Great British Pound to the Japanese Yen. You can see here that price is still within this area of interest. It has just recently created a second peak. This is actually a double top. What we could see here now is price come down, breaking this midpoint before correcting itself and then continuing lower. That would kind of give us what would look like a head and shoulders pattern. This is price basically distributing. Now, if price does continue to trade us higher, that's absolutely fine. I will just be waiting for a reaction from this area of interest. Again, if we are delivered with relevant confirmation and the confluence in order to enter a position, then I'll be looking to get involved in short positions. That's my bias for this market this week. I do want to trade this market in a short way. We just need to make sure that we are waiting for relevant pieces of confirmation before we get ourselves involved in this market. Those pieces of confirmation come from breaks of structure to the downside, and that's when we can then begin to look for our entry points, which will be via areas of supply in the market. But this here to me looks like a double top pattern, which may turn into a head and shoulders. It's a distribution in some eyes. all of those three things there that I've just suggested tend to result in a bearish move. So if you are looking to take part in this market, would be prepared to go short. Just make sure you have those pieces of confirmation in order to get yourself involved. Okay, moving over to the gold market, you can see here that price is currently putting in a corrective wave after this big move to the downside. This was due to fundamentals again with Trump and Harris. Obviously with recent results that put strength into the dollar, which obviously drives weakness into gold. But as we know, gold is a precious metal. It's not going to be short for a long period of time, I don't believe. I think there's always going to be value in gold. However, I can see price going short for a little bit because there is some inefficient structure that needs to be cleared a lot lower down. So it would be nice to see price pull back, giving us the opportunity to actually buy in and invest into gold again at a cheaper price before it goes on to set some new highs. So what we are seeing here is price pulling back. As I say, if we go to the 4 hours, you'll notice that we are getting some bullish structure here, and I feel this will drive us up and into this area before taking us lower into the market. Again, we just need to wait for relevant pieces of confirmation before we look to get involved in these markets. So a break of structure to the downside would do that. That would tell us that this corrective wave here is finished, and obviously a continuation to the downside longer term is in play, essentially. So I will be waiting for that opportunity. It's just a case of being patient. Now, if price does actually go on to trade through this, then we could look for a break and retest. So for price to trade through this, pull back to set a higher low, probably trade into this area of supply, which would then be considered an area of demand or a level of support. And then we can look to ride the market higher yet again, creating new highs in the market. But if I'm being completely honest with you, I do believe we are going to see some bearishness in the XAU USD market over the course of the next few weeks. Now, just to finish off on the US dollar Japanese yen, you can see here that price has been pulling back, correcting this inefficiency. It has traded into a fair value gap. We have seen good rejection from this fair value gap. I just want more confirmation before I look to buy into this market. But to be completely honest with you, as we know, this is a bullish market. Has been for the longest of times. I do have a bias to go short, just to correct some of this inefficient structure. But whether we are delivered with that is another story. So there are areas here, if we go to the weekly, you can see this represents a buy region within a bearish move. Price is reacting from this area. So there's obviously a lot of supply sat here being introduced, which is causing price to take a shift. So if we just go back down to the daily, you can see that price has traded into this area. We are seeing price begin to what looks like distribute as orders are removed and introduced into the market. So if we do have some kind of continuation to the downside, then I will be looking to get involved in this market in short positions. But I just need to be delivered with some further confirmation. This is the issue when it comes to high impact fundamental news like the NFP, results of elections, things of that nature, causes usual patterns that you would see in a market to become quite distorted. This was clear bullish structure, and then we had a break to the downside, a huge move to the upside, which contradicts itself straight away. And now we are seeing price pull back. When we are seeing breaks of structure to the upside, followed by breaks of structure to the downside, this is constant contradiction. So I need to wait for the market to fully settle before I can have a proper stance on this market. I would like to see price trade lower. We just need to be delivered with the right confirmation in order to get involved. If we were looking at this in terms of structural laws, it is still a bullish market, because it looks something like this. Ignoring all of these small increments and the small moves on the fractal timeframes, this is the structure. We have a low followed by a high, higher low, higher high. What we are seeing now is price correct itself before I move to the upside. Now, as I say, in order for me to get involved in this market, I would need to see some kind of confirmation for either a bullish market or a bearish one. With price being within this region of a large supply zone on the weekly timeframes, it's likely that price is distributing, potentially manipulating traders before a move to the downside. So I'm just going to hold tight with this market, wait and see how price plays out over the course of the next few days, and then maybe look to get involved later on in the week if we're delivered with relevant pieces of confirmation. Now, that's going to summarize this week's Sunday sessions video. Pretty brief, I know. I've tried to be quite quick with the analysis today. I'm not feeling too well, so if I sound a bit funny on this recording, that's why. If the analysis seems obscure in any way, again, it's probably because I'm full of cold. But nevertheless, I wanted to provide you guys with some content, as I will be away next weekend. So the likelihood of there being a Sunday sessions next weekend is very slim. However, to those in the VIP chat, I will be keeping you updated with my analysis throughout this week. Now, as I said at the start of the video, if you guys have any questions or queries with regards to this analysis, if there's anything you're unsure about, please leave them in the comments below. And if you have enjoyed, don't forget to leave it a thumbs up. I just want to say a massive thank you for the consistent support. We've actually hit over 150 sales of the Beating the Banks course, which is incredible. So thank you to everyone who has purchased. I would love to get some feedback from some of you guys, so I will be reaching out. I will be doing a little giveaway for my supporters and obviously the people that follow the journey. So make sure you guys stay tuned for that. But with all that being said, people, thank you very much for watching, and I'll catch you all in the next one.